Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, January 6, 2023. It's 12:19 p.m. as I'm starting this video. It's video number 2 of the day, and I'm going to do a very brief update on the equity markets just because that's where I like to start. But I also want to go over some additional trade ideas. I threw out several individual stock trade ideas for you yesterday, and I've got a couple more trade ideas today. So let's start out with where we're at with the markets. Here we are, right back to the top of the trading range, almost to the button. Now, obviously, the MO has been to buy the bottom of the range and sell the top of the range. It's been, even if you allowed for whipsaws, SPY's been a little tighter. We've had the whipsaws in QQQ, as I mentioned. But again, that would be, a great example of, when to hold off when you see QQQ break down, or if it would have been SPY and then the Qs were holding. But in this case, SPY held up and held both trendline support and well above the bottom of the range. So I just want to point out we're at the top of the ranges. And so where I was going with that is, yes, the MO has been to buy the bottom of the range and sell the top of the range, right? It's worked out very well, especially in recent days. However, the longer you get in a range like this, the greater the chance that it's going to break out each and every day. As time goes on, there's just a better chance it's going to break out because these ranges never last forever. And then, so where I'm going is I caution, I think at this point, it's safe to say, or to me, it's safe to assume that you shouldn't keep short in the ranges. Remember, yesterday I told you I flip-flopped. I covered my all my swing shorts and on the indexes and decided to go long. Now, look, in hindsight, that was right here. That was on this pullback. In hindsight, I wish I would have sold there and ran back, traded that back down and bought into it. But I'm sticking with it now. And again, if I'm wrong and we break to the downside of the range, no problem. Then I know where now to go. Get back into those shorts. It might be a little less favorable, from where I closed them out, but that's fine. But where I'm going is, at this point, we're probably, I would say, not going to get another pullback down there, and so we may just go on and break out. And why might we do that? Well, you can see today has been pretty bullish. If you look overall, Apple's still holding above the lows. There was a low when we broke out. Remember, broke out, back tested the bullish falling wedge, and we're still above the so far it put in a higher low. It's walking its way higher. It's not exactly an explosive rally following the break or the back test, at least certainly not after the breakout. Hit resistance several times. I covered that, but we're holding above the lows for now. I wish it wasn't Friday. Especially if we don't have a definitive break and hard rally today out above the top of the ranges, it's going to keep everyone guessing, and then we can gap down big on Monday, or we could gap up big on Monday. That's just the risk you have, especially on a weekend because of the extra overnight risk. But as of now, I just want to show you how things are looking. So Apple hanging in there by the skin of its teeth. Not crazy how it is on the daily chart because we're below that previous low. Like I said, I can sit here all day long and make a case to be long or short. My job's to give you the info, the data, bullish, bearish, whatever is relevant in the charts, and let you decide, and I'll tell you where I'm positioned, if I'm right or wrong. But there's Apple. Really want to see it regain 129. All right, that's a big thing. I mentioned it right here. We lost it and we back tested 129 but got rejected. So on this one from the daily chart, I give it a nay right now. And on the 60-minute chart, I give it a yay because we're still above the recent lows, but I mean not by much. But with that being said, that's what we are. So Microsoft looks like death on the daily. The 60-minute chart, you still barely have, if you want to clinging on to that divergence. And on this 60-minute chart, we really need to get back above 224. It's pretty easy. If we pop these ranges, we're going to run these stocks, these levels on the leaders, we will get back there. But the daily chart just looks like death on Microsoft. There's no good support here. Only potential bullish development is this doji candlestick here. Well, that's right now. The day is young. We'll see how it finishes. We could get a reversal candle, or we just continue going lower. Maybe this rally fails once again, as it has so many times at the top of these resistance zones that we're at, or trading ranges, I'm sorry. Alphabet, minor support here. It goes back to right here in late 2020, early 2021, and also that reaction high from September 2020. We hit it there, overshot it on a momentum-fueled overshoot. See a quick swoon down, but then recovered it, and we're back testing it, and we already back tested it recently, so it's decent support. Again, Microsoft needs to hold this to rally. If it doesn't, and I can't make a screaming case to buy it either based on the daily chart. PPO wants to cross over, but it hasn't yet. This is Alphabet Class A, of course. I'm sorry if I might have said Microsoft. And then the next one, Amazon, it's still one of my favorites if the market holds up here. Again, if the market doesn't hold, if we break down from those trading ranges, a lot of these stocks that are at support are going to break support. That's what happens in a bear market. Stocks fall to support. The early support levels, and this is why we caught a lot of rallies. Remember in the bear market when we were hitting my price targets on QQQ and SPY, and you were at support with divergences, and we got big rallies. And then you got to be careful, because what happens when a bear market starts to get some traction, I haven't seen it yet. We're not in that waterfall type, primary wave 3 down. If you're an Elliottician, Elliott wave theory, and you have a major five wave cycle, it's the C wave. The third one is, you get one down, A down, B up, C down. C is always the biggest, most impulsive. We're not there yet. And whether or not it plays out in a perfect Elliott wave fashion or not, we just haven't seen true waterfall selling. Now it could come, and this is where I'm trying to warn you of. So what happens is early on, support levels. Remember, I harped on this one multiple times, 101, 103, and I kept highlighting this as a long, gamed it, took out profits on the first bounce, got back in, gamed the second bounce. That's what you get early on in a bear market. But what happens is a bear market starts to really gain some traction, and the masses, or let's say those are a little dense, and things finally realize, oh, okay, it's a bear market. So when you get the masses realize that, you've had that paradigm shift of thinking, dip buyers stop buying the dips, and where I'm going with that is support levels then become mere speed bumps on the way down. And now, I'm not saying that's what this is going to be, because I haven't seen us to be in that stage of selling yet. It could be. It could be right around the corner. It could start next week. But as of now, as I like to say, support is support until unless broken, and we're not yet in that waterfall sell-off. And as I did the video earlier today, I made the case that we have quite a few market-leading stocks at support. So the bottom line is we are still at that, throughout Amazon here early in the week is, or maybe even was it last week, is, one of my favorites down to support. Hasn't gone anywhere yet, but it hasn't taken out the long-term support yet either. So it's anybody's game, and that game is going to be won or lost, I think, by how those 60-minute trading ranges are resolved. All right. The other thing that looks good so far today, if you look at Tesla was just getting pummeled in pre-market, and look at this turnaround right here from the lows after the market opened today. To so far, this stock has rallied until the recent highs about 11%. Now, Tesla's been going up and down, high single digits, even in the double digits on some days, and that's the nature of this stock. So it's not, it's not all high-fiving for the bulls yet. The stock just made a new 52-week low, so please remember that we're there. But you remember we have this support here highlighted about 109. 110, call it, and right there, and so far another punch below and a recovery back above. So there's a potential as well for this to be, and right now you have, if the day finishes like this, you have a bullish engulfing candlestick. Those are usually what you want to see for a lasting bottom. See this candlestick, the body of it, the green candle, today's candle engulfs the body of the previous candle right there, that little doji from yesterday. So that's what I'm seeing that's positive right now. But and all we got to do is just a little nudge higher. You look at the S&P 500 futures ES. This is my big level. This is the top of the trading range here, 3902, 3903. Look at this, boom, boom, little false breakout there, but boom, boom, boom. Look at all these reactions, and we're right there, just like a SPY I just showed you on the trading range. Same thing with NQ. We are right there, 11044. About 1104.450 is the top of the trading range in NQ. I'll box it in. There's your NQ trading range. Remember, we had the false breakout there, but you've had a double bottom so far. Successfully tested the previous low today. Did so with, we had divergence here. Remember, that was a positive divergent low, positive divergences. And being the fact that prices today made an equal low, but yet the indicators made higher low, it means the divergence is only bigger now, therefore setting the stage potentially for an even bigger rally. So I still maintain these targets, still leaning that way, and just want to get that out to you. Okay, enough on that. I've probably hammered in this case, a little too much. We'll see if it pans out. And now I'm going to get to those trade ideas for you. I told you one of the ones I liked was Market Access MKTX. And that one told you broke out yesterday. And I said this morning if you got any more upside, and you did. You had a nice chance to buy it this morning. It gapped up. That's a buy. It backfilled the gap, and it's moving up. So I told you my sole target at this point in time is just below that 336 level. This one's looking good, and you can, there's an uptrend line to watch. But as of now, that's good. I gave you Disney yesterday's, if you're especially, like blue chips. That one's starting to break out today. But again, these will play out, I believe. I have a high degree of confidence because they're some of my favorite individual stock picks if the market breaks out of these trading ranges and the breakout sticks and we rally. And these are some of my top picks for individual stocks. And then let me say this. I know it's a dirty word right now, but crypto. If the stock market breaks out and we get an early, January rally coming up here, then that means the market's going to revert back to risk on. It's been in risk off mode. And the cryptos are the king of risk on assets. I mean, there's nothing more risk on, and that's they're beat down, left for dead. They're toxic right now after the collapse of FTX, and then another crypto finance company or something yesterday. I saw bankruptcy filing there. It's not the first, but there it is. Look at that. I'm just showing you. This is a GBTC Bitcoin Trust. Basically, there's our support right here. Here's a downtrend line we're just cracking above. And I think this one can run all the way up to 1113 if we can get some traction on a rally. That would be about a 30% run in Bitcoin and GBTC. Let me show you the futures and the crypto itself. This is the actual Bitcoin crypto, BTC. This is just a 2-month hourly candlesticks. Look at this level I have here at about 16,924 right there, give or take. Look at how well that's acted as resistance there. And it's also been support back here, resistance back here. Boom, that's what you want to see taken out. And then if you trade futures, that would be BRR, or the mini contract, the mini futures are MBT. That's Mike Bravo Tango for the mini contract, but BRR is the regular Bitcoin futures contract. I'm looking for it here, guys. I have a ton of charts down below. Here it is. BRR. 1 month chart, 60-minute candles, downtrend line. Not crazy about it because we don't have that many we need a third reaction here, but either way, that may do the trick. But I also have a pretty nice resistance zone, and that aligns with that BTC resistance zone. Let me just zoom out a little longer for you. There it is. So you can see this one's also poised to pop. So my guess is if the SPY and QQQ can make solid and sustained breakouts above these trading ranges, crypto is going to run too. There's Bitcoin futures, and of course you have Ethereum as well. That's you can do the futures. Those are ETH, USDRR. It's a whole mouthful for a ticker symbol. 1290.66 is the next resistance and likely target. It's already been moving up. This one's been a little stronger. You can see my levels right here. But if it can pop that level, which it's likely to do, again, big conditional. And I say if and when the equity markets, you have to return to that risk-on environment, or I doubt crypto is going to go anywhere anytime soon. Oh, and then yeah, I already gave you the GBTC. So ETHE is your crypto ETF-like proxy. It's not exactly an ETF. It's similar. No divergence there. Just oversold. But you do have divergence on the PPOs I drew, and you had this little wedge type pattern which it just recently broke out of. Let me give you additional. I haven't updated this chart in a long time, so I'm going to give you levels right there. Drag that line down. First target about 596 almost, $7, and then I'd want to put a line, bring that line down because we're probably never getting back that high again. Maybe $8. So I'd say right now this is the sweet spot right here. Preferred target, $7. It's the bottom of that island cluster, bottom pattern right there, and that would be about a 26%. So yeah, so therefore I'm calling for about 25-30% potential rally in Bitcoin and Ethereum. Again, conditional on a breakout that sticks in the equity markets, breakout and rally. And then I threw out Zoom today, got that post out to you. There's the that's the daily chart. Remember, this is long-term support. This one came public here back in 2019. Back tested that level several times. You have nice, clean 3 reactions there, and we came very, very close to that level, about 61.60, but not quite there. So if we get rejected on these trading ranges, we're probably going at least back down to the bottom there. But otherwise, if we break out, so this one, like I tried to convey in that post, is pretty much conditional. Ideally, you want to see not just a breakout above the downtrend line here, but also a breakout in the equity markets, because this is a this is a tech stock, and it's going to be hard to see this one rally. Not impossible, but difficult to see it going. I'm calling for my first target, should we get the breakout, it's going to be about a 28% gain. Second target, if hit, would be about a 41% gain. Right now, that's all I'm preferring. That's where I plan to take profits as of right now, but I always say the charts are dynamic. So we'll see what the what both Zoom and the equity markets look like if and when we even get there. There's plenty of work to be done on this one. There's actually a little bit of minor resistance right here as well, but that's right past the breakout level. And again, it's very much conditional on what the equity markets do. In that post right after I got it out to you by email. So I always say this: if you're interested in Zoom, check the post. Come back into the site and check it. I did a follow-up post in the comments section with this 5-minute chart, highlighting what appears to be a bull flag continuation pattern. That consists of 3 components: a flagpole, which is an impulsive move up, followed by a level of consolidation that takes the form of a flag, just like this, or declining price channel. And you want to see typically the flag, as it was here, is on declining volume, followed by a breakout above the pattern. Now, as I said in the in that follow-up, that's a breakout. No, normally it's a boom. There's your buy point right there. You can jump on that. However, this breakout occurred, and this rally right here occurred exactly when QQQ and SPY hit the top of their trading ranges in NQ and ES. So it's not likely to go very far unless they break out. So if SPY and QQQ can break out and run today into the close, you get this. Or let's say next week, maybe. But if it doesn't happen today, it's going to kind of foil that flag around. A textbook bear flag, bull flag continuation pattern has the clean flagpole, impulsive move up flag, and then you break out and then you continue moving up in an equally impulsive manner. And again, this is why I watch and harp on and do these long videos, because everything's intertwined. If you're in a vacuum, you're trading in a vacuum, and you're taking bull flag breakouts like this, you wonder why it failed. Well, I'll tell you why it failed. It was because of this. That very same point in time, QQQ and NQ, as I showed you earlier, and SPY and ES, they all hit those comparable resistance levels. So that's it. I favor this. Really like to see it today. Weekend coming. What would happen is I could put pretty good odds on this. This is a good day to trade if you're in front of the computer and you have the time. If they can pop these levels on ES, NQ, SPY, yeah, if they pop them today, you'd probably get some short covering, especially because we're heading into the weekend. A lot of shorts, bears. Sentiment's getting pretty bearish lately. Likewise, if we get rejected again, that's that's not, it's not the end of the world until we take out the bottom of the ranges, but it would be yet another rejection, and that has been the MO. And although, like I said, I don't think we're going to get another leg down all the way back to the bottom of the ranges. If it happens, it happens, and that's not going to be a bullish sign, especially if we take out the bottom of those ranges. So there's where we lie. So watch those. It's simple. Just watch the top of the ranges, and I'll wait for breakout there. This is my wrong NQ chart. This is the one I showed you before, 1145 right there. Or pretty much today's highs in both SPY and QQQ and NQ and ES. All right, I am going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.